Good evening, everyone, and welcome to this special Nadex educational event. We're trying one of these out in the evening, and we are doing it for a specific, oh, if you give me a second, I've got too many things going on at the same time. There we go. Sorry about that. So I want to welcome everyone. First of all, everyone who was invited to this special webinar is new to Nadex. We have got thousands, literally thousands of new customers coming into the Nadex markets, and we wanted to try something as a one-off. So this is a good little test to see what the appetite is for some of these evening sessions, and specifically for this content. So my name is Todd Rich. I am with Nadex, and this is going to be an introduction to trading at Nadex. And I'm really going to focus on binary options. Now, you know what? Let's go ahead and just jump into it. As I see more people are rolling in, but I really want to get going because I think there's a really tangible, practical part of this that I think everyone's going to enjoy. And I think it's where people might get some of the biggest bang for their buck. Before I get into anything, I need to share this disclaimer that trading involves risk and may not be appropriate for everyone, and that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please don't construe anything I say as a buy or sell recommendation. I'm doing this for your education purposes. So, and that's going to become very important when we get into the practical demonstration. And I think that is part of the challenge of a lot of our new customers is really getting comfortable, not just with the products, but also the platform and how to use them and what some of the terms are and how some of the functionality works. So we are definitely going to get into all of that. But let's talk about what we're going to discuss this evening. I am going to spend maybe a minute or two talking about Nadex. I want to welcome everyone here. You've all come to Nadex. You're either in the account process or you're playing around with the demo account. Some of you are actually in there trading already. I think all of you will get some type of benefit from this session. By the way, I do want to state this at the beginning, and I will say this several times throughout. I am recording the session. I am recording it, and everyone will get an email to where that link is because it's a special link that we are going to send just to you. So that you have time to review it on your own, and you are certainly free to share that link with your friends. But it's not going to be one that you'll find readily on the Nadex website. So what are we going to cover? One, I am also going to cover what is a binary option. I want to cover the basics. I want people to understand what a binary option is and how they work. What is it that you're actually looking at when you talk about a binary option? What are you trading? How are they priced? And why does the price on these move? So once we understand that, we're going to go through some of the choices you've got in binary options. And then, and probably where I'm going to spend fully half the time is going to be a practical demonstration. If you've joined any of my sessions before, I've told folks that my mom is from the great state of Missouri, or if I'm going to pronounce it right, the great state of Missouri, and it is the show me state. And I am actually a big believer that a practical demonstration to show you how to understand this, where to click, what do these things mean? I think that often will be more impactful and resonates better with people who are trying to come into the Nadex markets. You need to see it. Definitely seeing it is handy. Okay, so quickly, who is Nadex? And just so you know, Nadex is an acronym, as are just about everything in the financial services industry. The financial services industry loves acronyms, and it stands for North American Derivatives Exchange. We are a properly regulated electronic exchange in the United States. Now, we are regulated by the CFTC, the Commodity Future Trade Commission, another one of those acronyms. Now, why is that important? And when it comes to binary options, Binary options, there are other binary option providers out in the world. You can probably find them or access them over the internet. They are not legal in the United States, but there are ways around accessing those if people are technologically savvy. And if you go to an offshore unregulated exchange, uh, my my advice would be caveat emptor, buyer beware. Whenever you're dealing with an unregulated entity, if you had any challenges, problems, and you wanted some type of recourse, it would be good luck to you. And that has actually been a problem in the binary option space in the past. There were a bunch of very nefarious actors out there doing very nefarious things. Customers had serious problems, and they have been banned and made illegal in a lot of places. And it's unfortunate. Now, while I say that, in the United States, there are a couple of binary options exchanges that are regulated by the CFTC, but Nadex is the premier one. We do almost all of the volume. In fact, it might be all of the volume, like right near 100%. There is a small one that offers contracts on weather. But that being said, we are a properly regulated exchange. And because of that, we have to adhere to the laws, rules, regulations. We are audited, and everything we do is got to be entirely on the up and up because we are regulated in the United States by a U.S. regulatory body, the CFTC, the Commodity Future Trade Commission. It happens to be the same regulator that regulates the Intercontinental Exchange, ICE, which owns the New York Stock Exchange, as well as the CME, the Chicago Mercantile Exchange. So that is important. And by the way, I already am getting some questions coming in, and I will tell you some of these challenges. I am going to, when we get to the platform, because we've got something about canceling trades, I am absolutely 100% going to cover that. That's what I said. The second half of this, when I get into the practical demonstration, is really where people are going to light it up. All right, let's keep moving on. Who is Nadex? One of the things that Nadex was done is we built the exchange specifically with the retail trader in mind. Now, what does that mean? Because retail traders have flooded into the markets, and we've heard about other places that offer access for retail traders to other markets. At Nadex, everything we built has a very low cost of entry, and everything has clearly defined risk reward. You know what could potentially happen before you even get into a trade, and you can see that, and we calculate that for you on the order ticket. And really what that means is there are no surprises. Generally speaking, when traders talk about surprises, they're usually bad. They're not a good thing. You hear these horror stories of a retail trader getting into a position and then getting a massive margin call or getting wiped out of everything. And it can happen when they don't really know what they're doing and they use some type of specific products and they get leveraged up, or they start using margin and they get blown up. That is the concept of margin, and margin calls don't exist at Nadex because we have very, very small contract size on our binary options. The maximum a contract will be worth, which is if the contract settles, and we'll talk about that, is $100. So very small notional value, very clearly defined risk. And it's really what people come to Nadex for, is to trade binary options. Now, we also offer other products like call spreads and knockouts. If you want more on those, we've got some recordings on the Nadex website as well as our YouTube channel, and we will always be doing new and fresh ones of those. But today, I really want to focus on binary options, right? So that's who is Nadex. Now let's talk about what a binary option is. And it is a contract. It is a short-term contract. This is the other thing that traders really like about Nadex, is you get this high-paced, fast action, short-term price action. So this isn't, ooh, I'm looking for something that might come out in 6 months. That's not what people at Nadex are looking for. They're looking for short-term price action. And we're going to talk about that as well. But these contracts that we have, they're all short-term contracts, and a binary option is a statement or a prediction. And that prediction has got 3 components to it. There's an underlying market. So today I'm going to use the S&P 500, and we've got a variety of underlying markets. We've got equity indices, foreign exchange, we've got commodities like gold and oil. But let's talk about the stock market. Everyone talks about the stock market, and the S&P 500 is a terrific benchmark because it's the top 500 stocks in the United States. So it's a basket of stocks. There are other indices like the Nasdaq 100, which are 100 technology stocks. Some of those stocks, in fact, all those stocks are in the S&P 500. There's the Dow Jones 30, which are industrial stocks, more blue chip stocks. Those stocks are also in the S&P 500. So the S&P 500 is a good benchmark for the broader stock market. So a binary option has an underlying market, the S&P 500, a condition or a strike price or a level, and that will be a price. Will the S&P 500, and then there's an expiration time. Will the S&P 500 be above a certain price at a certain time? So it's a statement or prediction. Will the underlying market, the S&P 500, condition be above a certain price at a certain time? And that time can be in the next 20 minutes. It could be in the next 2 hours. It could be at the end of the day. It could be at the end of the week. So there are a variety of choices. I mean, at Nadex, you do have a variety of choices of underlying markets. There are going to be a variety of conditions, different price levels for you to choose from, and we'll explain why. And then there's going to be different expiration times. When is this going to settle? Okay, so that's what a binary option is. It's a simple question that can be answered as yes or no, or true or false. Now, what's really interesting about Nadex binary options is you can sell them. You don't only have to buy them, you can also sell them. We will cover that. But it doesn't matter whether you're buying or selling them. The risk on either buying or selling, as well as the reward, is capped. You know what you could potentially make, and you know what you could potentially lose before you enter a trade. Now, a binary option will trade between a range. I mentioned, earlier that the highest can go is 100, the lowest it can go is 0. It will trade between 0 and 100. Now, I want to talk about that 0 and 100 and what that really represents. Now, as we mentioned, it's a true or false prediction. Either the event happens or the event doesn't happen. Either the S&P finishes above a certain price or it doesn't. And that's why it's called a binary option, because there are only 2 outcomes. If it settles above the price, the option will go to 100. If it settles at or below the price, it will go to 0. It's a yes or a no. It is a true or a false. Did it settle above? Did it not settle above? Now, what is that number 0 to 100? And really what you're trading, and what you can think of it as, is that is the market telling you at that moment in time what the probability of the event being true is. Now, it's the market determining that, because there are buyers and sellers, and I'm going to get into that in a little bit. But that is roughly what you can think of the price as. It is roughly the probability that at expiration, the event is going to be true. So if, for instance, you bought a binary option at 40, at that moment in time, there is a 40% chance that the outcome would be true and that it would go to 100. In which case you had risked 40. Now, oh, by the way, and ready before I actually go to that next step, that 0 and 100, we made it easy at Nadex. as I mentioned, we said our contracts are only worth $100. Not only is it the probability that the event's going to be true, it is also the dollar value of the contract. So if I buy one for 40, I am going to risk $40. I bought one, I'm risking $40. Now, it's also the probability at that moment in time, as reflected by the marketplace, that it will be true and go to 100. If I bought one at 40 and the event becomes true and it goes to 100, I would profit $60, which is where I was headed earlier. If I bought one at 40 and it becomes false and it goes to 0, I lose $40. But in the end, I know exactly what I could potentially make and exactly what I could potentially lose. If I buy it at 40, I could lose 40 and I could potentially make 60. If I bought one at 60, all right, I'd be risking $60. The most I can make is it goes to 100. I'd be risking 60 to potentially make 40. But at that moment in time, there's a 60% chance that could be true. Now, because there's a 60% chance it's true, that also means there's a 40% chance it's going to be false. Markets move around, and it's just the probability as priced by the market. Whether it's going to be true or false or not is going to be whether it's true or false or not. But the market is going to bake into the probabilities because their market is made up of buyers and sellers. So for instance, and I'm just going to give you an example, I could sell one at 40. Is the S&P 500 going to be above this price at this time? And I could think, no way is it going to settle up there. This market is going down today. And I sold one at 40. Now, I could potentially make 40. I sold it at 40. And if it becomes true, it goes to 0 and I keep the $40. If I sell it at 40 though, and it becomes a true statement, it goes up. I'm wrong. It went to 100. I'd lose 60. So you can both buy or sell a binary option. And what you're trading at the time is roughly the probability priced by the marketplace that it's going to be true. And as it turns out, it's also the dollar value. Now, I mentioned other listed options. That's on the slide. But what goes into the price of that probability? How is the marketplace pricing that probability? And the truth of the matter is there are two components. I mean, outside of the current price of the underlying, right? The current price of the S&P 500 and the strike price, my prediction level, the other things that will impact the price of that option are time and volatility. And it's really important to understand the impact of time and volatility on the price of the option. So I am going to go through this. And then once I kind of go through all of that and you really understand binary options, we are going to get practical. We are going to get into the platform and I'm going to show you how some of this stuff works, how to set up charts. Again, if anyone joined a little late, I am recording this and you will get emailed a link to the recording. Okay, so let's talk about the risk and reward. I have actually talked about the range that it trades between 0 and 100. And I've already talked about the fact that it's worth $100. Now, I mentioned at the beginning that there's no margin calls. You're not going to get surprised. Oh, that no one's going to call you up and say, you need to put more money in. That is because you have to put up collateral whenever you do a trade, all right? And whatever you do, your collateral is the maximum risk, all right? The most that you can lose. So if you buy a binary option, all right, you're going to have to put up the price that you pay. If I buy a binary option at 80, I got to put up the $80. If I buy it at 20, I've only got to put up $20. Now, if you sell it, as I mentioned before, you can sell. It's the difference between 100 and the price that you sold it at. So if I sold one at 40, it would be 100 minus 40. I could potentially lose 60. I'd have to put up $60 in order to put the trade on. If I sold one at 60, right? 100 minus 60 is 40. That's the most I could lose. I sold it at 60 and it goes to 100. I'd have to put up the $40. So everyone's got to fully collateralize their risk. And that's actually what you put up. And that is why there are no surprises in the end. Once you've put your trade on, you've put your you've put your capital at risk. Once you put your money in the market, you're not going to ever have to go back and put more in to cover your position. You've already put up the most that you could potentially lose. And then the reward is exactly the opposite. If you buy it, it can go to 100. And if you sell it, the most you can make is it goes to 0. So let's quickly look at an order ticket, and then I am going to do a practical demonstration of all this, but I want you to see what's on the order ticket now. First up, there is an indicative price. So that is where the S&P future is currently trading. At the time, it was trading at 41.77. Okay, and the condition, will the US 500, will the S&P 500 finish higher than 41.81 at 4:15 p.m.? Now, if you notice, in the upper right-hand corner, it tells you there's 3 hours and 25 minutes to go until settlement. So until expiration, so it's currently trading a little bit below 41.70, almost 41.78. So it's basically 3 points below 41.81. And it's currently trading a little bit below 50. Now, why is it trading a little bit below 50? Well, if the S&P were trading right at 41.81, at that moment in time, there'd be a 50-50 chance that it would settle higher or lower, right? It's right what we call at the money. And so when you're looking at a binary option that's right at the money, there's a 50-50 chance, and the binary option will be priced probably right around 50. But the fact that it's a little bit below, it's currently trading 41.78, it would have to get up to 41.81 to be at the money. It's currently trading a little bit below 50. Now, if I want to know what the probability that the market is pricing it at, I would basically look between the bid-ask spread. And that's that bid-ask spread. It's 36 and 41, so 48.5. Or I mean, 38.5. I apologize. 38.5. The market is saying there's about a 38.5% chance that this will go to 100, that it will settle above 41.81. Now, when you look at these, that sell side, the bid side or the sell side, it says 35.75. That is where you could sell contracts. 41 is where you could buy them. That is the current, there are bids and offers at those prices. In fact, if you look in the upper corner of the ticket, if I take this away, there's a 199 on the sell side up in the corner and a 75 in the upper right-hand side. If you can't see them, the 75 and the 199, that is how many contracts are currently bid for and how many contracts are currently offered. Now, do I have to trade on those markets? Do I have to? No. I could try to buy or sell in between. Now, am I necessarily going to buy or sell? Not necessarily, and I'm going to go through examples specifically, but I could try to buy one at 40. All right, I could put a bid in between the bid-ask spread at 40. Now, what would happen, and I will show this to you, is that sell side would then become 40, and the upper, if I only bid for one, that 199 would only show 1, and the whole world would see my one bid for at 40. And if someone wanted to sell it, they could sell one to me at 40. That is what we call a central limit order book. Anyone can put a bid, anyone can put an offer, anyone can put the number of contracts they want up there. Other people could potentially trade with them or not trade with them. Just because I bid for one for 40 doesn't mean I'm going to buy it at 40. If I really wanted to buy one, I would have to pay 41. Now, these markets can move around a bit, and you can notice that I'm using a limit GTC, a limit good until canceled. That means I'm just going to sit there and try to buy it for 40, and I'm going to put my order into the order book. The other choice is a market order. I will demonstrate both of those when we get over to the other part of the session. So I can put a bid in between. Will I necessarily buy it? No, but I can. I could also I could have clicked sell, and this would be red. It would be red over here, and you wouldn't have the blue on buy. This red sell, and I could try to sell one at 40 if I wanted to. Now, if I'm trying to buy one at 40, it does tell you down below exactly what you could potentially make and exactly what you could potentially lose. We calculate that for you. You never need to do the math. We will show you if you try to buy one and you buy one at this price, this is what you could potentially make and this is what you could potentially lose. If you're trying to sell one at a particular price, it will do the math for you. Okay, so that is the order ticket on a binary option. Now, I did mention I wanted to cover a little bit on time and volatility. And I want people to become clear on what could impact the price of that binary option. Because interestingly enough, the price of the binary option does not always move directly in line with the underlying. And I will show you why. So, it's a probability, right? We're looking at the probability that at expiration, it will settle in the money. The probability that it will settle as being true and go to 100. But it all depends. If it's early in the day and there's a lot of time for something to change, that'll be reflected in the probability. If it's a volatile market and it's going up and down and up and down, or it's a dead market, it's going nowhere, that too will get reflected in the price of the binary option. So let's work at an example. First, we're going to look at a high volatility example. And the question at the early in the day is, will the US 500 finish greater than 4181 at 415? All right, and we've got a chart now of what the S&P 500 did this particular day, and here's that 4181 price level. Okay, that's where 4181 is, and let's take a look at what happened to the price of the binary option throughout the day based on volatility and time. Now, early in the day, and if you look at the middle of these two numbers, that's the easy way to sort of pick the probability that the marketplace is determining. Remember, that's not the definitive probability. That's just what the marketplace is pricing it as. Right? That's just baked into the price of the contract, because we've got buyers and sellers all meeting in a central limit order book. And if there's more buyers, the price goes up, and if there's more sellers, the price goes down. But here's our equilibrium. It started off the day and it was trading for 56. Now, why was it 56? If you look at the price of the S&P, it was clearly above 4181 at that point in time. So the market was saying, hey, there's greater than a 50% chance that it will finish above 4181. But there's still a lot of time to go in the day. Now, it dropped. All right, it dropped quickly. It's still early in the day, and the price of the binary option fell along with the price of the S&P. It went down to a 44% probability. Now it chops ahead, and we're at midday. We're at midday, and we're basically in the same spot we were earlier in the day. But the price of the binary option at this point is now only 36. The market is only giving it a 36% chance of finishing above 4181. What happened between earlier in the day when it was trading at 44 and now when it's trading at the same price but it's only 36 is half the day went by. Right now there's a lot less time for something to happen. But this is a volatile marketplace and it rose. Right? And the price of the binary option went along with it. Now the probability was super high. Now they're pricing it up at 74%. Because it's above 4181 and there's less time in the day. Notice when it makes an equal move down, it really dropped. The price movement is much more dramatic as you get closer to settlement. As you get closer to expiration, the price movement in the binary option might swing much more dramatically because there's so much less time left. It dropped down to only a 24%, and oddly enough, it went to 100. Now, if it went anywhere above that blue green line, it would have settled at 100. And if it had gone way, way, way higher, it still would have only gone to 100. Right? In the end, it can only go to 100 or 0. Yes or no. Okay, and this is a high volatility environment. Let's take a look, and I'm just going to run through quickly because I don't need to go through all of that again. In a low volatility environment, the same situation, will the US 500 be greater than 4181? And you can see that it never went above 4181, but it always had value. Early in the day, that value was 44. As the day went on, it decayed away. What's interesting from here, watch, it went from 34. The price of the S&P actually went up. It's higher. Look at the move. The S&P actually went higher than where it was, but the binary option, the price of the binary option dropped to 20. And why is that? It's still below 4181, and there is no time left in the day. And then ultimately it went to 0. Could it have spiked up above? Yes. But you can see throughout the day on the chart pattern, it was a low volatility day. There wasn't really a lot going on. Something could have happened. It can. News can come out. Anything can happen. Who knows? But on a low volatility day, you can see how it decayed away from 44 all the way down to 0. Now, it works the same way above, but instead of trending towards 0, it trends toward 100. Earlier in the day, it's above 50, but it's at 54. Later in the day, the price of the S&P was actually lower, but the binary option was higher. Why? Low volatility, and it's still above 4181. And then it just sort of decayed up to 100. All right, so I think those are some nice examples for you to see in a high volatility environment, how it can swing around, and particularly at the end of the day, the price can get pretty dramatic, or at the end of the settlement period. So if you're trading 20-minute binary options on the S&P, it can get pretty dramatic as you get close to settlement. All right, so on strike prices, right? What are your choices? And you've picked the S&P 500. Is the S&P 500, and people want to trade the stock market. And I've just been using this as an example. This all works the same for gold, oil, foreign exchange pairs. I just wanted to use an equity index for this one. Is we've give you multiple conditions, and the way you're going to find them they're going to be sorted by how much time is left. So on the S&P 500, on the binary options, you can see we have 2-hour binary options, we have daily ones, and we have weekly ones. And we even give you a little countdown clock, how much time is left in each contract. Now, with equity indices, we also have 20-minute binary options. It's a separate little section as a choice underneath binary options on the platform. I will show you that. We have 20 minutes, we have 2 hours, we have daily, we have weekly. Now, inside each one of those time frames, there are going to be a variety of conditions. What are your choices? Will the S&P be above 4169? Right, and then you're going to see the probabilities, right, on the right-hand side. Will it be above 4181? And here are the probabilities, right? So we give you different strike prices, essentially different conditions within each one of the time frames or the expiration cycles. So there's plenty of things to choose from for you to pick. Now, full alert, I hope I'm getting everyone's attention. An important rule when trading binary options, a very important rule when trading binary options. If you take nothing else away from today, if you talk to your friends about binary options, if you tell them nothing else, tell them this. And this is really important. Just because there's an expiration associated with the contract does not mean you have to wait until then to see what happens. All right, I'm going to say that again. Just because there's an expiration, will it be above a certain price at a certain time, in the next 20 minutes, in the next 2 hours, at the end of the day? Just because there's an expiration time does not mean you have to wait until then to see what happens. You can choose to exit the position early. Right? And I am going to go through examples of exiting a position early. I will show you exactly where to click to exit a position early. Now, why would you want to do that? There are two reasons why you would want to exit a position early. One would be because you want to lock in a profit, right? And the other is because you would want to limit losses. You don't have to wait for it to go to 100 or 0. The strategy for some people is to buy small binary options, lower dollar ones. I'll buy a 20. It's only got a 20% chance of finishing at 100. All right, it's only got a 20% chance that it will finish above that strike price. But people might buy a 20 probability. They're risking 20. What could they potentially make? They could potentially make 80 if it goes to 100, but they might buy it at 20 and it could rally up and the S&P 500 could go right at the money. All right, it goes right at the money. And as I discussed earlier, if it goes right at the money, we would expect to see that trading right around 50. Right now, could you wait and see if it goes to 100 and hope it settles above 100? Yes. But if there's a lot of time left in the day, you might decide, you know what? I bought it at 20. It went to 50. So I've made $30. I'm willing to sell it at 50. I bought it at 20. I sold it at 50. I risked 20. I made 30. I made 150% return on my money. Thank you. I'm going to move on to another trade. So you've got to make that determination. Now, the other way that works is I buy one, say at 40. Okay, I buy one at 40. I'm looking for it to go up, but I'm wrong. I'm wrong, and it went down. And it went down, and now it's only trading for 20. All right, I bought it at 40. It's only trading for 20. Do I have to hold on to that position and let it go to 0 and lose the last 20? And the answer is no. I could decide I made a poor choice. My expectation was that it was going to go higher, but it went lower. I bought it at 40. I sold it at 20. I can cut my losses. I only lost $20 instead of $40 because I changed my mind. You are allowed to change your mind. You don't have to wait. Okay. So hopefully that was very clear that that you can exit a position early if you want. All right, and I'm going to go through examples of that. All right, that actually wraps up. That's all I wanted to do on the slideshow part. I really wanted to spend a much more time on the platform. Now, if you've got any questions for Nadex, please email us, customerservice@nadex.com. In fact, you know what? I'm going to drop that into the chat right now. And it's good for you just to, I just want to make sure I typed it right. Customerservice@nadex.com. Okay. One, I just dropped that email address out there if you need it. The other thing you're going to see up there is you can follow us on social media. Now, I am actually going to tell you probably the best one to follow us on is YouTube. All right. If you're not following Nadex on YouTube, I am going to actually drop that in to the chat as well. If you check out our YouTube channel, we put up a lot of content. Every day we do a morning analysis. The CEO does an early morning update, just to highlight real quick. I mean, Travis gets on for a minute and a half and really kind of talks about what's happening in the marketplace. We do a full-blown 15-20 minute analysis session with charts and technical analysis. In fact, here, I'm actually going to drop another link in there. You can subscribe to our channel. If you're not coming to our morning analysis sessions, I just dropped in a link that takes you to our morning analysis, and you can set a reminder on YouTube. It's 7:45 to 8 a.m. Central. So 8:45 to 9 a.m. every morning, we live stream and you can follow those live streams. They immediately get posted to our YouTube channel. So if you're following our YouTube channel and you didn't join the live session, you can quickly listen to the recording. And we do an analysis of what happened overnight, what reports or economic events might be happening in the day, where might there be potential volatility that you might find interesting, and it helps you find hot spots in the market. So at least, if you're only trading the S&P 500, that's great. We often do S&P 500, but if you're doing that, you might want to consider where there might be other opportunities in the markets. So it does give you some help. Now, I mentioned a word, technical analysis. If you're not strong on technical analysis, you don't even know what technical analysis is. Actually, I'm doing an intro to technical analysis in 2 days. So you can register for that on the Nadex website. The recording for that will go up on the website. But if you register for the session, we'll send you reminders that we're doing it, and that and we'll also tell you where you'll find the recordings, whether you're able to join or whether you want to watch it on demand later at your leisure. If you don't know anything about technical analysis, if that term is totally foreign to you, you might want to come in and learn some basics, just an introduction to the concept. All right, the one last thing I'm going to drop up here quickly is we're also doing a boot camp. We do boot camps, how to day trade at Nadex. We did a month and a half ago. We're going to be talking about gold and oil markets, how to day trade gold and oil. That's actually next week. So I'm just going to tease that up there if you're interested. Again, if you register for the event, you will get sent the links to the recordings as soon as they're available. And I know a lot of people like to just catch the recordings. I know that's how I consume a lot of content. It's like TV. I don't necessarily want to watch the show. I'm going to catch it on my DVR or on my TiVo, or I'll stream it later. We do make everything available on demand. This particular session that you're on right now, though, we'll send you a private link to the recording later. All right, now the last thing I wanted to point out before we jump over to the platform is if you are at Nadex and you're trading at Nadex and you haven't taken advantage of the refer a friend, it is out there. I will show you where you can find this when you log into the platform. In fact, you can copy your own personal link. Everyone's got their own personal invitation. If you invite your friends, if your friend signs up and places 5 trades within the first 30 days of applying for the Nadex account, we will put $100 into your account and we'll put $100 into your friend's account. So by simply referring a friend and if they place 5 trades within the first 30 days, you each get $100. It's win-win. You can refer up to 10 friends. So if you actually get 10 of your friends to sign up and each one of those friends places 5 trades within 30 days, you'll actually end up with an extra $1,000 in your account, and 10 of your friends will each have $100. It's a nice way you can trade along with your friends. So if you're at Nadex and you're trading and you haven't taken advantage of the refer a friend, it's a nice incentive for you to bring friends in, and you each can get some money. All right, let's move over now to the platform. All right, I am now going to share. Let me switch my application real quickly. We're going to do that. Okay, and I want to make certain, that we are all looking at the Nadex platform. So this is where we can have a little bit of fun. Okay, and there are quite a few things that I would like to cover. And I want to walk through the whole entire trade process, closing a trade. I really want you to understand the order book, how market orders work, how limit orders work. Why would my order get rejected? How does my buying power? I mean, there's a lot of little nuances and things on the platform that aren't always exactly intuitive to new people. And I really want to make sure that everyone gets an opportunity to see how the process works. All right, now we are on the platform. One, if you do not have a demo account, I would recommend that you get a demo account. It says demo in the upper right-hand corner. It's a way for you to practice trade. It's a way for you to practice trade. You get practice money. I think we initially put $10,000 into your account. You'll notice that I've got an available balance right now of $12,000 on this one because I've actually accidentally made some money demoing the platform. Hey, you know what? That's okay. Better to be lucky than good. Now, I will tell you that your experience in a demo environment is not going to be exactly the same as a live environment. And there's a reason for that. That is because there are different sets of eyeballs on the demo environment than there are in a live environment. And people can do crazy things in the demo environment that they wouldn't do in a live environment. In fact, I'm going to do some of those just to demonstrate some of the functionality. And so that in and of itself will change your experience in a demo environment. Now, if you're not familiar with the platform, over on the left-hand side, this is where we have our different products: binary options, call spreads, knockouts. Down below is your order panel, and then this is where the charts and order ticket are going to show up. Okay. Now, by the way, if you were wondering about that refer a friend, it's in your account section. If I click on account, you will see refer a friend. You can click on refer a friend. And oh, you know what? I can't do it from a demo account. You can only do it from a live account, but that's when you would see that little button that says copy and it gives you all the rules. It's not going to give it to me in a demo. You've got to do that from a live environment, but that's where you would find it. All right, so let's take a look over at what's going on in the indices. Okay, and I'm going to click on, and I told you I wanted to do the S&P 500. Now, we don't have the 20 minutes right now. Those are during the day, okay? We are now in the evening session, so we do not have the 20-minute binary options, but during the day, that is a choice, all right? And I'm going to go ahead and just we just printed our daily binary options for the S&P 500 for tomorrow, and let's just take a look. And you could see how many strike prices we give you, how many choices. This will expire in 20 hours. And it's pretty easy to find the one that's very near at the money where the S&P is currently trading, because all I have to do is look at the price and find the one that's closest to 50. So I'm going to go ahead and click on one of these, and I am going to move this aside. All right, I am now going to zoom in. Now, it does give me all of the strike prices. If I don't want to see all of those because I find it a little distracting, okay, you can change that. I'm going to go to customize appearance, and oh wait, this might not be where I show my grid, I show my watermark. You know what, I think it might be under a different setting. Show strikes. That's it. It's under show. Okay. I want to see my drawing tools, my indications, open position, working order. I'm going to turn off strikes. I'm turning that off. Boom. Okay, that made my chart look a whole lot cleaner and easier to read. The only one I want to see is maybe the one that I'm interested in. Okay. Now, you can customize your charts. Let me just show you quickly. I can choose the time frame. I might just want to get a daily chart. And by the way, once I've chosen one, if I take my mouse and I move over to the numbers over here, I'm actually hitting scroll, and I can zoom in or out and choose the time frame. And I can see at the bottom, this was Thursday, this was Friday, this was yesterday, here's Tuesday today. Okay, so you can choose the zone that you would like to look at. I'm going to move it into a little bit closer because I do want to give us some chart here. I do want to see some chart. Okay, there we go. So this is just the last couple days here of the S&P 500, and if I wanted to choose a different strike, I just simply click a different strike. Here's the 4180. Now I know that it's currently trading 4182. That is above 4180, so the price is currently above 50. If I thought, all right, now, oh, by the way, I could do 15-minute charts. I could do 30-minute. Each one of those is a candle. This is a candlestick. I could change how many candles I have. I can put indicators or drawing tools. If there's anything in here that's going to help you in your trading decisions, that would be a different session. I can draw on my chart. All right, I can use some of these drawing tools. For instance, if I wanted to look, all right, is there a channel going on right now? You know, here's a little channel in the last few hours. All right, and I'm just drawing this channel on here and sort of fitting it a little bit. Okay, there we go. Right. You can put your own, however you want to set up your chart, you can set your chart how you want to set your chart. If I wanted to put on Fibonacci, if you're not familiar with Fibonacci retracements, it's a mathematical model based on how it's a ratio that you see in nature. Upper left-hand corner down to the right-hand corner, and then over to the side, I've got Fibonacci levels that might help me in my trading decision. All right, so you can customize your chart. Let's go through some examples of how some of this actually works: placing a trade, canceling a trade, modifying orders. So let's say I were interested. I think the S&P is going to go higher. I've been paying attention to the news. Earnings are coming out. The earnings are really good. It's hit or miss on how they're interpreting it on certain stocks. I want to buy this binary option. All right, now I'm going to click on the buy, and you can see in my order ticket, all right, what the market currently is: 44.5 bid, 49 and a quarter. Do I have to pay 49 and a quarter? The answer is no. If I wanted to potentially pay 46, I could try to buy it at 46. This is a limit order. All right. If I put my order in, I place my order, notice that it now has a 46 bid in here. That is me. And I know that the most I can make is the most I can make is $54. The most I could lose is 46. Now, have I actually done a trade? The answer is no. I have got a resting order in the order book. Here is my order at the bottom of the screen. It says I'm trying to buy one. Will I necessarily buy one? Maybe. If someone sold it to me, it doesn't mean I have to buy one. If I really want to buy one, I could buy one at 48 and a quarter, and I could just simply place an order. And notice this 100 went down to 99. And that order executed immediately. I did buy one at 48 and a quarter. And you can see I bought it at 48 and a quarter. Now, why does it say that I've already lost $2.25? Now, it doesn't know this, but it's assuming that I could immediately sell it at 46, right? That's actually me bidding for 46. So that doesn't really, I would end up trading with myself. I don't even know if it would let me do that, but in demo it might. But it's just calculating worst case scenario. That's what it's doing right now, is it's calculating worst case scenario. Okay. Now, could I put a bid below the market? Let's say I'm waiting for it to dip. I'm waiting for this to dip down, and if it dropped down to 20, 25, I'd pay 25. Could I put a bid below at 25? And the answer is yes. And I also want to show you something else. Notice my available balance, my $12,642. What if I wanted to buy 500 of them at 25? Okay. Now this is why I say demo is cuckoo, because people might do something. I'm playing around. If I were to buy 500 at 25, it's telling me that I could potentially lose $12,500. Now, if I bought them at 25, it doesn't say I'm actually buying them at 25. If I bought them below there and I got filled and it went up to 100, I can make $37,000. But the reason I'm doing this is I want you to watch what happens to my available balance. Okay. When I put a bid in to buy a bunch of these down below, and if I hit place order, oh, I didn't even have enough to cover that. I apologize. Why is it telling me that? I thought, oh, because I have another position on. Let's just do a smaller number. Let's do 400. Place the order. Okay, when I did 400, notice that my available balance dropped to 2,200. Okay, why did my available balance drop? That's because I've got this monster order to buy 400 of these things down at 25. By the way, when I tried to buy too many of them, it rejected my order. It said, order rejected. You don't have enough money to cover this. All right. So some people, when they're putting in orders to buy or sell, if they put in an order that's too big, now I had to do a massive number because this account had $12,000 in it. It's a demo account. If a real account, if I only had, $1,000 or $1,500, I mean, I wouldn't have to put in 400. But why would my order get rejected? One, it's because I don't have enough available balance. All right, so it rejected. Now notice, I haven't bought anything. My position is still only long one. All right, but my buying power, my available balance, is impacted by the other orders out here. Now, let's just say I try to buy one. Let's say I wanted to buy 5 of them now. Actually, let's just try to buy 10. Let's just try to buy 10 at 48 and a quarter. All right, I want to buy 10 at 40. Oh, it'll let me do that. Let's just buy 50 at 48 and a quarter. Okay. Is it going to allow me to place this order? I mean, I'm only currently long one. Why couldn't I buy 50 at 48 and a quarter? Well, if I place that order, it rejected. I don't have enough money. Now, why don't I have enough money? That is because I've got this crazy, crazy order down below that I'm trying to buy 400 of them way down at 25. So if I want to free up my buying power, one of the things I could do, I can click on that order and I can delete it. All right, now I've deleted that order. Now on my orders, I'm still only trying to buy that one at 46. I've got one that I paid 48 and a quarter. Now, if I wanted to buy 5 more at 48 and a quarter, is it going to let me put this in? Notice my buying power is all the way back up to 12,000. Yes, I can place that order to buy, and there's my bid. All right, I'm trying to buy 5 more of them. In fact, I just bought them. All right, so now I'm going to go ahead and cancel this bid below. I just want to delete that order. So I've got no orders, but in my positions, notice now that I've got a total of 6. Okay, I've bought a total of 6. My average price was 48 and a quarter. All right, and it's telling me because I've got 6 of them, it looks like I would lose $27. Why is that? It's assuming I'm selling them at the current bid to liquidate. I'm not going to sell them. I think this is going higher. I'm happy trying to sell to own 6 of them at 48 and a quarter. Now, do I have to wait until expiration to see if these go to 100? And the answer is no. Okay, let's say I wanted to sell half of these. I bought them at 48 and a quarter. Maybe if it went to 68 and a half, it goes up $20. It goes up $20. 68 and a quarter. It goes up $20. Maybe I'd sell half of them at 68 and a quarter and take $20 on 3 of them. Like 60. I want to lock in $60 profit on 3 of them. All right, I buy them at 48 and a half, 48 and a quarter. I'd sell them at 68 and a quarter, but only 3 of them. I want to keep the other 3. So I want to sell potentially part of the position. I am going to click on that. I'm looking to sell, okay? But I only want to sell 3. I don't want to sell all of them. I only want to sell 3, and I want to offer them all the way up at 68 and a quarter. All right, now here's an order to sell up at 68 and a quarter, which is which is $20 higher than where I bought them, and only on 3 of them. I'd take some profit on 3 of them. I can hit place that order. That order is received. And if you look over in my orders now, I am trying to sell 3 up above. It tells me they're currently at 43 and a quarter. I'd sell them if they went up to 68 and a quarter. And I don't know if the market's going to rally up there. And you know what? Overnight, it might. It might get up there. If I went to sleep tonight, I actually might sell these 3 in the middle of the night. And that'd be great because I would have locked in a profit on 3 of them and I would still have these other 3. Now, what else could happen? It could go lower overnight and I could wake up in the morning and find out that I'm still long 6 of these and they're trading at 20. So it's possible, right? I just wanted to show you how you can place bids or offers in between the bid-ask spread. I could put bids down below. I could put offers up above. And remember, anything that based upon the positions that I've executed and my open orders, my buying power is going to change. All right, now let me take a quick peek because I've got a few. Oh shoot! All right, someone had a technical problem. Okay, so I mean that was a lot that I wanted to cover. I wanted to cover a central limit order book. All right, we do have an order book. These are all, and by the way, if I want to see the market depth, I can see this is actually interesting, is I can see anyone who's placed offers up above and anyone who's placed bids down below. All right, so I can see the depth of the market, and you always know how many are currently bid for and currently offered. Okay, so that understanding a central limit order book is important. Now, I've been talking about limit orders. I've been talking about limit orders only. I want to show you the other way to trade these. When the markets are moving quickly, people will often go, and I'm going to change this from a limit order to a market order. Now, what is a market order? If I place a market order, if I place one to sell, it'll just sell it at that price. If I place one to buy, it'll just try to buy it at the low at that price. So if I place an order right now at 47 and a half, I may get 47 and a half. I may get 47 and 3/4 because the market moves from the moment that I hit buy. All right, and the market might change. Now, can I control how much through a current offer or through a current bid I would let a market order go and still be comfortable with the trade? I mean, notice how quickly these prices move. Now, we do have a setting, okay? I am going to go over to settings down here in the left-hand corner, and we have what's called risk tolerance. Now, you also can set other settings. I am currently on the dark theme. I think it's the easiest on the eyes. You can choose one of the other settings. You can change your default contract size. I currently have it set to 1 because I'm always demonstrating the platform, and it's easier for me to demonstrate with a simple 1 lot. But somebody might always trade 2 or 3, and they could change their default order size. So when you click on an order ticket, it will pre-populate the size with the default size that you want, okay? You can always change the size on the order ticket, but sometimes people would rather have it always default to a particular size. You can also change, do you want to default to a limit order or a market order? All right, I have mine set to limit. I like to choose the price that I would potentially trade at. I don't always use market orders, but some people really like market orders because they want to get that fast execution. I want to pay 47 and a half right now. I'm going to buy one at 47 and a half. Woo, I got it before it clicked up to 80. By the way, notice now that I've got 7. I just bought an extra one. Now, This is where it gets interesting. All right, tolerance levels. What do these tolerance levels mean? Now, you can set your default tolerance level to a dollar amount. All right, some people set it as low as they can to $1, meaning if I'm using a market order, okay, and I hit place order and it's currently 48. Oh, look at 47. It's 47 and it keeps ticking on me. It's currently 48. All right. I hit place order and it's trading 50. Okay. I have a $1 tolerance. It was trading 48, 47 and a half. I hit place order and it immediately jumps up to 50. It will not execute your order. You're saying if it's $1 more than where it currently is, I don't want to buy it. All right, because the market got away from me. All right, that's why you have that in place. If you had nothing on a market order and you go to buy one, if I went to buy one at 47 and a half and I got filled at 80, I would be pretty upset. I'm like, I just tried to buy 47 and a half and I got filled at 80 because my tolerance level was set to $40. Can I even set it that high? I don't know if I can set it that high. Let's see how high it'll let me set it. Okay, it'll only set it at 25, the maximum tolerance. So if you set it to the maximum of 25, if I tried to buy at 48, it would go to 63 would be the maximum. I would never get filled at 80. It wouldn't let it ever happen. The maximum you could set it at is $25. But even then, if I tried to buy one at 48 and I got filled at 63, I might not be very happy. But that's because but it would happen if I set my tolerance level to 25. Some people keep that nice and low. They keep it at 1. And so when you're using a market order, I'd take a fill at 48 all the way up to 49. After 49, forget about it. I don't want it. Okay, that's what your tolerance, and that is important. All right, and I can't really demonstrate that unless we're having a massively volatile market. And I put my at 1, and it kept on jumping more than $1. Right now, every time I hit place an order on a market order, it's going to get filled because it's very quiet. So that is also a central limit order book. Anyone can put a bid, anyone can put an offer. You can put bids below, you can put offers above, you can put markets, bids or offers in between. A limit order, you're choosing the price that you would like to trade at. Does it mean you're going to trade at that price? Not necessarily, but you might. If you don't, that order will be sitting in your order book and it will be chewing up available balance. So other orders might get canceled or rejected because you have a bunch of orders lined up to potentially buy or sell that aren't getting filled, and they're chewing up your available balance buying power. Now, at expiration, all of those orders will get canceled because the contract is over. So, and then all of a sudden, all your available balance will come back. But if you notice that you don't have available balance, check your open orders and see, are you chewing up buying power with orders that are away from the market? And why aren't they in your positions pane? Well, you might not see positions because when you placed an order, instead of using a market order, you might have used a limit order. And just because it's a limit order, hey, I could try to buy one at 45. I could try to buy one at 45 and a quarter right now. Place my order. Am I going to buy it there? I don't know. Someone would have to sell it to me. It's in my order. So I've got a bid to below to buy another one. I've got an offer to sell 3 of my current contracts up above. So you can layer an order book, but that will impact your available balance and buying power. Okay. And why are my orders getting rejected? Because I don't have the buying power, or I went to buy it, all right, and my tolerance was set to 1 and I had a market order, and I said, buy one, and it went up really fast and I missed it. And I simply missed it. And that can happen. That can absolutely happen. So you need to understand how these tolerance levels work. Okay. Are there any questions? I think I've answered all those questions. Now, the other thing that I have also covered is I bought 7 of these now. Do I have to wait until expiration to see what happens? Again, no. Remember, I showed you that. I clicked on that and I tried to, and I've already placed an order to sell some a little bit higher. Okay, so I covered a lot. Now, we've covered a lot in this time. We've gone through all the basics of binary options, how they're yes or no, that they're either going to go to 0 or 100, that is the probability of it being true at that moment in time, as predicted by the marketplace. Remember, because anyone can put bids and offers in here, you get a trade when a buyer and a seller meet together. That is the market predicting that in the end, at expiration, it will be true. And that will change. That number will fluctuate based on volatility and time to expiration. Right? As you get closer to expiration, it can get very, very volatile. And then I covered how you can place your orders, how you can manage your orders, how you can cancel orders, how you can close a position. Now I'm going to go one step further in a second, because I love to end this way, but I just want to take a peek. Are limit orders affected by tolerance? And the answer is no. Limit orders are not affected by tolerance. And the reason a limit order is not, and I'm going to go over how to exit early again. I will go over. Let's do that. Let's do both of those. So the reason a limit order. So let's close my settings. All right. Good. Actually, let's go back. Hold on. What did I do in my settings? I wanted to check this again. Go to settings. My contract size is still 1. Good. I want to leave that there. My order type is still limit, not market. And the tolerance, I kind of like that. I like setting my tolerance levels low. Why not? I'll keep them at $1. Now, why is a limit order not impacted? Because a limit order, I'm actually putting up my price. Notice here that I am trying to buy one at 45.25. I'm either going to buy it at 45.25 or I'm not. All right, it doesn't matter. I am putting my stake in the sand and saying, this is the price I'm willing to pay, end of story. And either someone will sell it to me or someone won't sell it to me. The tolerance levels come into play when I'm doing market orders. And that needs to be in place because, and the reason that needs to be in place is because I could potentially try to buy one and it could take off. If I went to buy one at 45.5, now the market's going down right now, but if I tried to buy one at 45.5 and all of a sudden this candle turned green and the price went from 45 to 50, right? I wouldn't want to buy one. If I tried to buy it at 45 and I have $1 tolerance, I would only pay up to 46. And then after that, I'm saying I don't want it. That's my tolerance. I can only handle a fill $1 away from either when I'm trying to buy $1 above, or if I'm trying to sell $1 below. So the tolerance levels only come into play for market orders. Now let's go over closing a position again, okay? Now, it looks like I bought another one. So now I have a total of 8 of these, all right? I am going to cancel this order. All right, so let's delete the order. All right, and let's put in, let's take a look at what I currently have. I'm gonna go to my positions again, and I can see that I've bought 8 of these, okay? And I've paid an average price of $47.78. All right, I bought and I was wrong and it's going down, okay? It's going down. So let's go over closing an order again. Now, one would be closing it for a profit. All right, let's just say I want to get rid, I would sell 4 of these now up at, let's add $20, up at 68. All right, I would sell them up at 68. Now that's way above the market. I click on my order. Okay, I just clicked on it. It opened up an order ticket and it's saying, let's sell. But I don't want to sell it at 40. I want to sell it up at 68. And I don't want to sell all 8 of them. I'd only sell 4 of them. Okay, I'm putting an offer. I'm going to try to sell, because that's why it's red, 4 at a price of 68. That's a limit order. All right, I'd only sell them at 68. That's above where we currently are. I'm going to go ahead and hit place order. My order was received, and I'm currently trying to sell for up at 68 above the market. Now, how else could I get out of this? All right, I could also just decide I made a mistake. I don't want to own 8 of these. I only want to own 6 of them. Okay, so I am going to click on this again, and I want to get rid of 2 of them. So I'm going to make this a 2. All right, and I just want to sell 2. Now, I'm offering them at 40 and a quarter. They're currently trading 40.75. I'll trade at the highest bid. All right, if I want to sell 2, I can simply click. Now they'll sell at 40 and a quarter. You know, if I want to sell them at 40 and a half, I can actually put a limit order to sell them 40 and a half. I'll sell 2, place my order. That's interesting. Now it immediately went bid. I'm kind of curious. Let's see what price I got. All right, now I'm still trying to sell my 4 up above. I've only got 6. I sold 2 of them. And if I go to my 24-hour history, wow. And that's, you see, sometimes that happens. This is just what can happen. I sent my order to sell 2 at 40 and a half. And just as I did that, someone said they'd pay 40.75. I actually filled 25 cents better than I had expected. All right, that is how I closed an order. I closed 2 of them. I dumped 2 for a loss. I didn't want to have all 8, so I sold 2 of them. And now I could take a look. I've only got 6 of these, and I'm currently offering 4 of them up above. And if it went up to 68 somehow miraculously, I'd sell 4 at 68, take a profit on those 4, which would help offset the loss on the 2 that I've already experienced. And I'd still have 2 that might go to 100. So you can layer in where you buy, and you can layer in where you sell. You can use limit orders. You can use market orders. Just realize when you're using a limit order, it doesn't mean you're necessarily going to get a trade. I may or may not get filled. All right. Someone else would have to trade with me. If I do a market order, I should get filled with a market order. I should get filled. The only reason I wouldn't get filled for a market order is based upon what my tolerance levels are on settings. If I have my tolerance level for, say, my binary options set too low, if I tried to sell one at 40 and it was immediately trading at 35 and my tolerance was only 1, if I told it to sell at 40, I would only sell down to 39, would be the worst case scenario. If I had a market order to sell, if I said, let's sell one of these as a market order, I would sell it at 40, but with a tolerance level of 1 on my binaries, I would sell it from 40 and I would take a fill down to 39, and anything below 39, it would get rejected. It said, you know what? You told me don't sell it below 39 because you wanted to have only $1 in tolerance. So market orders, you have to be concerned with the tolerance amount. Limit orders, that simply doesn't matter. But a limit order, I may or may not trade. Now, some people, if they want to trade, like if they use limit orders, but they'll just put in a price above. I might put in a price of 40. If I wanted to buy one right now, I might say 45. Look at that. As soon as that happens, it goes up to 45 and a half. I'd be willing to pay up to 46. I just put an order in to say I'd be willing to pay up to 46, and I try to buy it. And if I get it lower, wonderful. But if I don't, at 46 would be the worst case scenario. So some people they create a synthetic or a de facto market order with tolerance by simply bidding above or offering below, and realize that can happen. I tried to sell at 40 and a half. I said, I want to sell at 40 and a half. And I actually got filled at 40.75. So you can bid through an offer. You can offer through a bid. So if I only have an order in there, I'm trying to figure out. So if you only have one order, there would be nothing in orders or positions just in 24 hours. So these are all fills. All right. The only thing in history are orders that actually traded. Okay. These are actually, it'll show when I sent an order and when it traded. Whenever I send an order, and this is just kind of handy to look at. Really, what you want to be paying attention to, the most important parts, positions. Did I do a trade? Do I have a position on, and do I need to concern myself with my position? These are actual positions that you've got. Orders are just open orders where you're trying to do something, but you may do it or you may not. I'm trying to sell way higher. All right. I may be also trying to bid lower. Or I could have a bid that's right between the bid-ask spread, or an offer between the bid-ask spread. Orders are things that you're trying to do but haven't done yet. They haven't executed yet. Once an order trades, it becomes a position. And if you do a trade, you've got a history. Now, some people are asking, and I do know, like, is there a way for you to get out of a trade if it's going against you? So because these are so small, and because there's limited risk reward, inherently in these, you have defined risk, defined reward. I'm not willing to lose more than $40 if I buy one at 40. That's it. And I know the worst case scenario is I buy at 40. Now, if I want to get out of a position and trade out because it's profitable, I can offer, well, if I bought one at 40, would I want to sell it at 60? Maybe. I can put an offer above the market. If I sold one, if I'm short and I want to buy one back lower, I could bid for them lower. The other side would be, if it's going against me, can I just get out? That would be a stop order. We are working at building in stop orders, but ultimately, really, you have to kind of pay attention. You have to be paying attention to your position. I bought these at 47. It's gone down a little bit. If this was trading in the 20, 18 range, maybe I just want to, call uncle and just trade out of it. You would have to trade out of it yourself. You'd actually have to do it. And you could do it again. You could do this from the platform. If you're not on mobile, you can click on the mobile, you can scan it. We do have, you can trade from an Android or an iPhone, right? It's just called, it's not an app in the App Store. It's called Progressive Web App Technology, PWA. So if you're not familiar with that, you can save, and I don't have a mobile phone plugged in, but you can save it on your phone, and it will look just like an app. It'll behave like an app. You just don't download it from the App Store. You'd have to, you could scan this in, and then you would have to save it on your phone as an icon. The cool thing about that is, because you're not downloading software, whenever you launch the application, you're getting the newest, freshest technology that we've got. There's no update my application or update my app nonsense. Now, Before we call it a day, I want to just do one of these because I kind of like this. Let's see how much time is left. This is a 5-minute binary option, and I'm just going to pick one. God, give me one that's here. This will be fun. This is the US dollar Japanese yen. And I want you to see how price moves on these binary options. I'm going to go to a 1-minute chart. All right, I'm going to zoom way in. Okay. Oh, maybe we will, maybe we won't. This might be a little too far apart. You know what? These are a little too far apart. Let me try a different one. So give me a second. I do want to show the strikes. This is a show. I do want to see strikes now. And I want to pick a different one. If we could find a good one, it's kind of fun to, these all might be too far apart. Yeah, they're all a little too far apart. You do get a feeling. Here's the Aussie US dollar. Let's just watch what happens. There is only 3 minutes to go in these binary options. There is volatility. Notice that this one right now, there's about a 18% chance. This one is all the way, they're calling it 88% chance. I don't know what's going to happen. These volatility, these would move pretty dramatically. When the markets are busy, these volatilities can go flying around as you watch these candles move. Currently in this 1-minute candle, nothing is happening, and there's only 2.5 minutes to go. So in all likelihood, it looks like this one is going to go to 0, and this one is probably going to go to 100. I was hoping I might catch a really volatile one where it moves up and down and it goes through multiple strikes. Right at the very end of a contract. Look, now let's watch. This is coming lower. This was almost a guaranteed lock up at 90%. As this 1-minute candle is forming and it's coming down, it's dropping down to the 80%. It's still looking like it's going to go to 100, and it's coming back a little bit. But you would watch it go from 80 down to 0 quickly if we saw a sharper down. And you can see there, I mean, these are 1-minute candles. You can see how the Aussie US dollar has made some moves pretty dramatically. And you can really see how binary options work on steroids when you look at 5-minute binary options. I'm not telling you to go trade these. I just want you to, it's an example of those, when I was showing you earlier, low volatility, high volatility, what happens to the price of the binary option. If you just watched these for a little bit, when the markets are moving around, you really get a feel for how the price of these binary options can change very dramatically as you get closer and closer to expiration, when there's only a minute or two left, when there's only seconds to go. In fact, when there's 20 seconds to go, the markets generally go blank because no one wants to take the risk of what's going to potentially happen. It's just not worth it. Oh, look at this. It's breaking down. It's breaking down. There's still 34 seconds. And now look at that. With less than 30 seconds to go, they disappeared. There was a chance we could have bought this from in the 80s. Now, I don't know what's going to happen. I do want to see what's going to happen in the last 18 seconds. This will be kind of fun to see what happens. And remember, it's either going to go to 0 or 100. And if it finishes above, it goes to 100. And if it finishes below, it's 0. It's yes or no, 3, 2, 1. All right, this one did go to 100. This one did go to 0. And we just started a new 5-minute binary clock. Rather interesting. It's a great way to just to get a feel for how binary options work. Yeah, I mean, it's really, it's interesting to watch. I mean, look at how quickly these are moving. This one that just settled at 100 and was just in the 60s, it's now, I mean, look at it, it moves so quickly. And now it's in the 20s. All right. And there's probably a binary option down here So now you're getting a little bit of a feel for it as it moves around. The reason I put that up there, let's refresh this and click on a new one so that we're actually looking at live contracts. The reason I wanted to show that is a lot of binary option traders will liquidate their position before settlement, before expiration. And the reason is something could crazy happen in the last second if you're right near the strike. So and you're watching it happen right now. I mean, this one, it was really remarkable. When this session started a minute 15 seconds ago, we could have sold this in the 60s. Now it's, and look at this one, it's going lower. I think it's going to keep going lower. I'm gonna sell one. Let's just see what happens. Let's just have a little bit of fun. Not a buy or sell recommendation. I did sell one. I sold at 49. All right. I mean, this is, you want price action. I might buy it back. I'm just gonna buy it back right now. And I just bought it back. So just like that in a few seconds, let's just look what I did. I mean, if you missed that, I sold one. I sent the order at, I tried to, look at that, funny. I tried to sell it at 45. I sold it at 49. I sold it at 49. I bought it back at 28. Did I need to buy it back? Nope. It kept going lower. It kept going. I didn't need to buy it back at all. The point being is this is binary options in a very fast-paced environment. Every 5 minutes they reset. These are all foreign exchange contracts. We do have 20 minutes in the S&P and other equity indices, but if nothing else, you can sort of watch these and see how binary options behave, and it might help you when you're looking at a little bit of a longer time frame, how these prices move as it gets closer to expiration and as volatility comes into play. And that was what I had covered in the session earlier. And then the question is can I have an expiration a month away? We don't have that currently. Ours are, the longest that we have for ours are out a week. That's what we have. They start off out a week on Sunday evenings, and we launch weekly contracts, daily contracts, hourly in some products, and then in some there's 2 hours, 5 minutes, and 20 minutes. But we do not have anything that goes out more than a week. With that, I want to thank you all again for being here at Nadex. If you've got any questions, please email us. In fact, I want to put that back up if I've still got that slideshow up. If you give me 1 second. There we go. I did want to share this with you again. Any questions for us, please email us, customerservice@nadex.com. We can't help you if you're having any challenges or questions if you don't reach out to us. Hopefully we covered a lot of that in this session. This was recorded. You will get a link to the recording. And I also want to remind you, if you haven't taken advantage of the Refer a Friend program, it's something that you might want to take advantage of. It's a great way to get, to play along with your friends, and everyone can get some extra cash put into their account if you follow the policy. So with that, once again, thank you for joining. I hope you come to the technical analysis session on Tuesday. You'll find the registration on the Nadex website. I hope you join us in the morning on YouTube. On YouTube, we go live every morning. You can get some analysis on hot spots in the markets. You can also catch all of our recordings there as well. Thanks again, everyone. Good luck in the markets, and we'll catch you later.